Basil Chapman sitting in for Tom O'Brien. Tom is in New York at the Marriott Marquis. It is the Expo, I believe it is, and you can go visit him there. I'm sure you'd love to see. I think he's giving a talk tomorrow. Be back Wednesday. So Basil Chapman, I do the Tiger Technicians Hour at 12 o'clock every day, noon to 1 p.m. Same call-in number, 877-927-6648. And I have a daily newsletter called The Opening Call. Very comprehensive newsletter. Comes out every morning by 8:35. You've got your 5, 6, 7 charts, or sometimes more than that. Just looking at what we think are the focus points and what I think are the stocks and indexes that we want to really get to grips with technically, and what we will have as positions, and we look at those positions every day. So the Dow closed up almost 400 points at 25,709. For us, it was very important. In the Chapman Wave methodology, I just slide this across here for a moment. There's a very simple technique. You identify the lowest low bar, and you merely count each successively higher bar after that on the upside. Alphabetize them. Uppercase on the way up, lowercase on the way down. We want to get to the fourth highest peak. That's peak A, B, C, D. At D, other things can happen. It can still go to E, F, and G, but the fourth highest peak is really the objective, and then we use other techniques. Well, we went to a peak D at the high of 26,616 on the 26th of January, pulled back very sharply, had what I call a Chapman Wave 2-bar reversal, pulled back. We were fortunate that we did manage to go short after that break to the downside, and then we reversed to the upside. Now we're long on the day after the low. It was made on the 9th of February. We're still long, and what we needed to see, and this is really important, I wanted to see a break above the 25,432 high that was made right here on the 16th of February. One of the reasons is I wanted to see how strong this leg C would be. This is a very strong leg C. It allows me to put an up arrow here. Now we're gone from a buy signal to a buy mode in the Dow. I wouldn't be surprised if we have a little bit of choppiness going into when the Fed talks on Wednesday, but this is very important. Why? Because now we are at 25,709. We are 900 points away from the all-time high. That's doable under certain circumstances, but most importantly, it's this. So the daily chart on the left, the weekly chart in the middle here shows you that we made that high at a peak E, that's the fifth highest peak, plunged 12.2% to 23,360, and then had a rally, and only today have we started what I call a gray leg A. Now, I'm going to show you some charts that are going to put this in perspective. Daily, weekly is improving. It's not great. It's just improving. Daily is very strong for now. And the monthly chart looks as if, ho-hum, if you went away for a few weeks and you came back, you left and the Dow was at the high of 26,616. Big deal, 900 points down. But wait a minute, we went under the 9-period exponential moving average, but the MACD did not budge at all. It is still very strong. Stochastic above 80% is very good. Above 90% is excellent, and 95% is really outstanding. So this is the key, is that the monthly charts are still very strong in all the indices. So let's go on, and now we can do this a little quicker. We'll go to the S&P. The S&P is up 32 at 2779. Also broke a downtrend line that I was showing in the previous chart. This is very important. It's a very strong leg C, and it has gone above the 50% level. Retracement here as well. The weekly chart is not strong at all technically. The monthly chart is still very strong. So what we're looking at is for the Dow. This is very important in the 25,700s. It means that if there's a close this week, any day this week into the 25,850 level, there's just a really good chance that we could go towards the all-time high. And the key support now for the Dow is at about 25,300, and the S&P would be at 27,080 right now. The key support would be at 2750. So now let's go to the QQQ. Why? Because as I said, if you were away for a couple of weeks and you came back and you actually bought the Qs right at the high, 170.95, you were the top tick on the 26th. We are trading at 170.40, 55 cents away in a V-shaped pattern. So a couple of things happen in this particular pattern. In the weekly chart, you can see the technicals did improve. They're not great, but they did improve, and the monthly chart is still outstanding. What's really important is, because this leg C, if there is a very, very sharp, swift move, and we can see the QQQs, which is the power shares, Nasdaq's the NDX 100 really. If it can trade in the next, I'd even give it until Wednesday a week, next week into March. If it can trade into the 172.80s, that's going to suggest we've raised the base, and it's going to be very, very positive. Let's look at the IWM. IWM at this particular point is the Russell 2000 trading. It's weaker. It's gone to a leg D already. It's taken a lot of effort to do that. It's the weakest link so far. But what's really important is the SMH, the semiconductor index, is like the QQQs, very strong. You need the semis. They've led the market up and down for the last 2 years. If they can break above 108.56, the all-time high on the 23rd, that's going to be very important, and they are right now at 107.79. Now, this is going to be very interesting. Gold attempted overnight to have a very good rally. It looked good, and then all of a sudden that fizzled. Is up 4.7 right now at 1335, and this is going to be key. It looks to me like gold is setting up in a trading range. It doesn't look awful. It doesn't look great. It's just stuck in this trading range, and the range will be between 1352. No, I'm going to say 1347 to 1352 on the upside, and 1327 to 1320 on the downside. A break of either of those levels would mean that trend should continue. But this is very interesting, because if you look at the dollar hasn't gone anywhere. It's kind of stuck in this range as well. And the dollar's down 3 cents at 89.85. So the 3 ticks that it's down, this is very important, because they held above the 9-period moving average. The weekly chart is improving a little bit. I just don't see anything just yet for the dollar. It's just stuck in a range until it can get into the 91s. I'm just going to say range bound. And now we're going to go to crude oil. Crude oil had a very nice day. It is up 45 cents at 64. This is also in leg C. Here's that downtrend line that we've been looking at in the other charts. And that downtrend line, it comes in at about 64.5, 64.50. We'll see how that's going to be handled over the next few days, but the chart looks good. And the weekly chart is actually not bad at all. And the 200-period moving average of 67 is like a magnet, but it'll only kick in as a magnet if crude oil can close above 65.50 in the next 2 or 3 days. So Basil Chapman sitting here for the one and only Tom O'Brien. I'll be right back. Dow's up almost 400 points. S&P's up 32. We'll be right back after these important messages.